Hey there. In this video, I want to talk a little bit about manual versus automated underwriting. Whether you're doing a VA loan or any other type of loan, there are two different types of underwriting. There is automated underwriting, which is exactly how it sounds, and there's also manual underwriting. So before I tell you a little bit about how this works on VA loans, keep in mind there are a lot of lender overlays. Lender overlays are lender rules over and above what the VA requires. The VA home loan is very flexible. It's a loan without rules, so lenders have their own rules over and above what the VA requires. And so some lenders might say, well, we don't even offer manual underwriting, or we only do manual underwriting over a certain credit score, that type of thing. And so I'm going to talk a little bit about how lender overlays work, and more importantly, how those work with related to different types of underwriting. So automated underwriting is exactly how it sounds. What happens is, and that's the first choice that we always do. And the way that works is I will take your income and put it all in the system and check your pay stubs, make sure that all works, look at your debts, make sure that all works, and press a button, and it'll give us a yes or no answer. It'll either say approve eligible or refer. And the advantages of automated underwriting can be slightly easier because there's less paperwork. It can be faster. It's more fair too because it's really software picking it. And the rates can be better because some lenders don't even do manual underwriting. So as a broker, I have 150 options. Well, if you're only doing a manual underwrite, over half of my options are not available because they don't offer manual underwriting. Now, if you do not pass automated underwriting, then becomes what's called a VA manual underwrite. Not all lenders offer it. Not all lenders know how to do it, but I have both. So manual underwriting. The advantages of manual underwriting are, first advantage is it is a more flexible program. If you have a lot of weird things on your credit that need to be explained, you can explain it and get exceptions, and it's very helpful. With manual underwriting, that layer of explanation is everything. You're going to need a very detailed layer of explanation. Oftentimes, depending on the scenario, you might actually need notes or whatever to document what you're saying, but it's very, very flexible. Now, with manual underwriting, oftentimes there are debt ratio and residual income limits. On the VA home loan program, there actually is no debt ratio limit, but most lenders will have debt ratios over and above what the VA requires, which, like I said, they don't have any. So what is a debt ratio? Debt ratio, basically, you're taking your pre-tax income and divide that by your debts, and it comes up with a number. And lenders like to look at that as a measure of whether or not you're able to pay your bills. Now, if you don't meet that, they could deny the loan, but luckily, every lender has different limits, and I have some that are super flexible and super aggressive on those debt ratio limits. The other thing to keep in mind is residual income. Residual income is your bottom line number after tax. So what we do is we take your top level of income and take out taxes, take out insurance, take out your mortgage payment, take out childcare, which is unique for VA, by the way, and we come up with a bottom line number. That's your residual income or leftover money. That's should be, and we take out utilities too. Sorry, missed that one. And then you come up with a bottom line number that is the minimum standard that you need to have left at the end of the month after all the bills are paid. And the idea is we need to make sure that you have enough money left over the end of the month to pay your bills so that you can afford the loan. You want to be able to afford it, right? That's always helpful. And the VA sets standards for residual income, and it's kind of confusing because different areas have different numbers that you need to meet. And there's family size and loan size, and that's a whole different topic. Now, the reason I say this on a manual underwrite is there's actually a 20% overage rule. So, for example, if in your area and your family size, it's $1,000, just keep it simple. It's $1,000 that you need to have left over at the end of the month. And so if you're doing a manual underwrite, it would have to actually be $1,200 because there's a 20% overage rule on that. So, but it can be done. If you meet everything else and you meet that 20% overage rule, then that can be done. Second thing to keep in mind, or next thing to keep in mind, is housing history is super important on a manual underwrite. That's actually part of the VA guidelines. And we will need to see 1 year of housing history if you're paying a mortgage now and you're a homeowner now, or 2 years if you are a renter. Now, I've had a lot of people ask me, well, what about if I have housing gaps? Maybe they're living on mom's couch for a while, or they are homeless for a while, or anything, or living in a hotel, or living in a camper, all kinds of weird scenarios. Those are actually allowed. We just need to see it. The big thing we're looking for, and this is a VA standard, so everybody has this guideline, is we're looking for no late payments is the first thing. The second thing is no evictions. If you don't have any late payments or no evictions the past 2 years, we're good. But we will need to see that housing history. You will need to document it. And, if you have a lot of weird housing, it might take a while to document all that paperwork, but we'll need to see it. And you can either get landlord letters, you can get receipts. If you pay with a credit card, get credit card receipt. If you pay with cash, maybe you stayed at a hotel for a while, you can get the hotel receipts, anything to document that housing history, but it's super, super important. Next thing to keep in mind is typically, and I said typically, is 1 year of no other late payments. Now, the VA does not have a specific guideline on this, but every single lender is going to ask for 1 year with no late payments on your credit cards, installment loans, that type of thing. Most will exclude more medical type situations because we know that they like to screw over the doctors. So most lenders will exclude that, but other types of debts, they want to make sure that you are financially stable right now. Now, there is a VA rule called extenuating circumstance, and I have a whole other series of videos on that topic. But if there's a medical situation or a layoff situation during that period, oftentimes we could waive that 1 year waiting period, and the VA allows for that. So that is a brief synopsis of manual versus automated underwriting. As always, if you have any questions about VA home loans, give me a call. My number is 947-572-3713. Experience@scarpro.com. Talk to you soon. Bye.